The stocks that I had reviewed in this video here in 2023 had an average return of 341% in 2 years, while the S&P 500 was up only 37% during the same time. So if you had compared these two returns from an investment of, I don't know, let's say $10,000, one would have given you a balance of just over $13,000, while the other would have been over $44,000. And I have had a lot of requests to follow up on that video. So today I'm going to cover the top 5 AI stocks that are relatively cheap with today's standards. And I'm going to add one more to the mix because I have had a lot of requests for me to review CoreWeave. So I'm going to cover that one too. Let's go ahead and jump right in and unpack this list. Oh, but hey, before we do, if you like my content and my free spreadsheets and access to my portfolio from my free newsletter, then please, I would really appreciate it if you'd press the like button so my content can continue to grow. First up is Nebius Group, and I'm not sure if I'm pronouncing it right, but they're an Amsterdam-based AI cloud spinout from a company called Yandex that happens to offer developers on-demand clusters of Nvidia GPUs and an InfiniBand wired stack design purely for large-scale model training. They happen to be an emerging European alternative to AWS or Azure, and in just the past few weeks, it became the first provider to launch Nvidia's GB200 Blackwell superchips in Europe, and they unveiled a UK build-out loaded with B300 GPUs for this fall, handling customers' early access to trillion parameter horsepower with sovereign data residency baked right in. They were bolstered by last year's $700 million Nvidia-led funding round. Now Nebius is chasing a $1 billion revenue run rate by 2025. Boiling it down, no company wants to take on the expense of buying all the latest hardware for AI models. So they happen to rent them out from companies like this, AWS, and Microsoft. And with Nebius being a European option, I think that a lot of companies within Europe are going to welcome the competition. In looking at their financials, they took a major hit to their margins last year due to heavy investments into new GPU clusters along with customer acquisitions. Their margins are expected to rally over the second half of this year, so that makes this company a really good candidate to get in cheap before all of that happens. Analysts see this company with over 25% upside over the next 12 months. And hey, I also love that Nvidia is investing into this company, which tells me that they see them as a long-term partner. Next is Innodata, which is a behind-the-scenes AI data engineering company that's become crucial in the generative AI boom. It specializes in preparing and annotating large data sets, fine-tuning models, and evaluating AI systems. Essentially, they're providing the fuel for AI applications. Innodata's client list includes 5 of the magnificent 7 tech giants like Microsoft, Alphabet, and Amazon, who happen to rely on its services to train and deploy AI at scale. What makes Innodata unique is its deep expertise in AI data operations and a new generative AI test and evaluation platform that automates adversarial testing and safety checks for AI models. This platform, launched in beta with early customers like Masterclass, addresses the growing enterprise need for AI model reliability and bias detection, positioning Innodata at the forefront of AI model assurance. I love this because this is a whole new class of technology that literally emerged over the past 2 years. And it's going to become a necessity for most every company that's relying on AI. And in looking at their financials, their margins jumped way positive last year, and their debt to assets have been dropping the past 2 years. And their operating income in the lower left has absolutely blown up. Analysts see Innodata with over 40% upside for the next 12 months. The great part about AI is that it allows for new tools to be created literally overnight, and the companies creating them to become instant rock stars, like today's sponsor, Bonsai International, an AI-driven marketing technology company focused on helping businesses scale quicker by effectively targeting, engaging, and measuring their customers. Bonsai provides powerful AI tools like Curate, its new GPT-powered newsletter builder, and Demio, an award-winning AI webinar platform. Their tech happens to be in high demand, servicing over 90,000 customers, including notable names like Cisco and HP, proving that this small-cap company can compete and win. The financials show explosive growth, with Q1 2025 revenue surged 213% year over year to $3.4 million. Then the gross margins hit an impressive 82.1%, and the net losses are shrinking fast. Strategic acquisitions like Vidello are significantly driving revenue and scale. Bonsai is a modern, agile, AI-native player in this booming $1.5 trillion global marketing tech market. And if you'd like to learn more, then please check out the link down in the description. Now we'll move on to Applied Digital, which builds AI factory data centers in power-rich North Dakota and Texas. Then they lease that GPU horsepower to hyperscalers and neoclouds. Their edge is bespoke, liquid-cooled campuses that slash operating costs and scale to hundreds of megawatts. Just this month, Applied Digital has been on a roll, inking a $7 billion 15-year lease with CoreWeave at its new Polaris Forge AI factory, teaming up with ABB at their location in North Dakota campus, which is only a couple of hours away from me. And they also published a white paper bragging that those design tweaks can slash lifetime data center costs by roughly $2.7 billion. And you will see that Wall Street's been taking notice too, because they've been pushing up their forecasts after seeing some of these new deals. Their financials aren't as clean as most of the others, but they took a major hit to margins with their investments in infrastructures that are just coming online this year, which accounts for some of those spikes in the debt. And analysts see the potential with them showing upwards of 30% upside over the next 12 months. Next, we have one of my favorite stocks of AppLovin, which of course, it always makes me think of McLovin, where they happen to be a mobile technology company that operates a marketing and monetization platform for app developers. In simple terms, AppLovin software and AI algorithms help businesses acquire and monetize users at massive scale. Its flagship Axon machine learning engine runs lightning-fast ad auctions and matches ads to users in apps with pinpoint precision, processing billions of data points in microseconds. This happens to give AppLovin a technological edge in the mobile ad ecosystem, along with an extensive first-party data network from the many apps that it works with. And recently, the company underwent a major transformation, where it sold off its mobile gaming division to a third party, in order for it to focus 100% of its time on its high-growth, high-margin advertising platform. AppLovin is even expanding beyond games into e-commerce advertising, now operating at a $1 billion annual run rate in that segment with extremely low churn. And of course, there's a lot of social media buzz around AppLovin being a potential bidder for TikTok's US operations, if of course they ever come up for sale. But I'm also guessing there's a lot of other big buyers way ahead of them. When we look at their financials, they look great because, like Google advertising, AppLovin is literally printing money. Their margins have taken off in the past year. Their debt to assets isn't really the best, but their operating cash flow is on fire. And that's why analysts see AppLovin with over 47% upside. Now, this happens to be a stock that I have been talking about for over 2 years, and it has consistently surprised me in a good way. This next company has been a constant request from my viewers, and that happens to be CoreWeave, which is a specialized cloud infrastructure provider focused on high-performance computing. Think of it as an alternative to AWS or Azure, but optimized purely for AI workloads and GPU computing. Now, they were founded only a few years ago, and CoreWeave has rapidly scaled by offering on-demand access to massive clusters of Nvidia GPUs. And they've attracted clients like OpenAI and Microsoft that need that extra capacity for training large models. The company went public in March of 2025, and it is notably backed by Nvidia. And then we have CoreWeave's unique approach to raise large amounts of capital to buy cutting-edge chips and build data centers, of which they then effectively rent that out to AI developers. In fact, their management plans to spend an astonishing $20 to $23 billion in 2025 on expanding AI infrastructure, which is an almost unheard of CapEx figure to meet the booming demand for its clients. And this aggressive scaling is enabled by creative financing. CoreWeave just secured a $2.3 billion debt facility led by Magnetar and Blackstone. And they did this by collateralizing its fleet of Nvidia GPUs. And as a side note, the company is even in talks to acquire Core Scientific, which is a large bankrupt crypto mining firm, to repurpose its 200 megawatts of power and its facilities for AI data centers. And if that deal closes, then CoreWeave would gain valuable infrastructure to keep up with the AI demand. And don't forget that earlier, CoreWeave also had investments with Applied Digital that I mentioned earlier on. Now, with them being newer, I don't have any financials to review, but I will show that analysts do have them with a negative 52% downside over the next 12 months. Okay, so this is a company that doesn't really have any financials to give us, so we can't look at any fundamentals. And their only real saving grace is that they're in tight with Nvidia. This is one where I am going to set it on the sidelines and I'm going to watch it for the next year just to see how it settles in. The current stock valuation to me seems completely outrageous, and it isn't a risk that I would be willing to take with my money today. Hey, as a quick reminder, I do have a link to a free spreadsheet of these stocks and about 10 others that I didn't select for today's video down in the description. So if you want to do a little bit of research on your own, go ahead and check it out. Our next company is Zeta Global, which personalization and analytics. Its core product, the Zeta marketing platform, helps enterprises unify consumer data, apply AI to derive insights, and engage customers across channels with personalized campaigns. In practice, Zeta's platform might ingest data from email, websites, social media, etc. And then they use machine learning to help a client decide who to target, when, and with what message to maximize the ROI. Zeta sets itself apart with its proprietary data cloud of over 235 million consumer profiles and has developed tools like Zeta AI Agent Studio to automate marketing tasks and decision making. The company emphasizes measurable outcomes, and its mantra is helping marketers to do more with less, which has resonated as marketing teams face budget pressures that everyone is facing today. Zeta has also been executing a savvy growth strategy, making accretive acquisitions and partnering with cloud providers like AWS for efficient scaling. This has allowed Zeta to steadily improve its profit margins while maintaining strong revenue growth. Their financials look like their margins are on the tipping point of breaking consistently positive, while their revenue is growing year over year. I can fully expect a company like this to quickly grow once marketing teams are forced to do more with less. And of course, they're going to lean in heavy with AI options with what Zeta offers. Okay, there you have it. That is my list of hot AI stocks, and I genuinely hope that they give me an average of 341% return over the next 2 years, just like the other set. If you would, let me know in the comments if there's a different company that you would have added to the mix. Hey, and as always, thank you so much for watching.